Welcome, welcome, welcome. I'm your host, Henri Arslanian, and welcome to another episode of the Future of Money podcast. As many of your loyal listeners know, my goal with this podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments we are seeing in the field of crypto, and hopefully empower you with this information and then let you make your own decision on what their impact can be on the future of money and the future of finance. And to do this, I invite each week one of the leading figures of the global crypto community to have this one-on-one conversation amongst crypto aficionados, or today with the crypto dad, and I'll get that in a second, and really discuss some of these topics. Again, if you like the show, guys, make sure to give us a 5-star rating and share it with some friends that really helps us with discoverability. And before I really introduce my guest today, a really big thank you for all the support for the new book. My latest book, The Book of Crypto, has become the #1 new release globally on financial services on Amazon, and now has become a global top 10 bestseller as well. So really big thank you for all the support from that perspective. I'm super excited to introduce our guest today. Giancarlo is the executive chairman of the Digital Dollar Foundation, and he's also the former CFTC chairman. He's known as Crypto Dad, which is the title of his latest book, and we'll get to that in a second. But really, probably one of the people that I admire the most in the crypto industry, and who I think has had some very, very big impact on the development, not only of crypto regulations, but also crypto policy. Chris, great to have you on the show today.
Henri, great to be with you. And thank you for that really kind and warm introduction. I can't wait to do this interview.
Well, one thing that people don't know about Chris is actually not only Chairman Giancarlo is actually, people know you as Crypto Dad, but actually you're a very big banjo and guitar player. And actually, as a special surprise to our listeners today and the viewers or those listening, we're going to have like an Easter egg during this episode, and you'll be able to hear and see a scene where Chris is playing. Are you excited to share that with our listeners as well, Chris?
Oh, absolutely. Some people play golf to let off steam. Others play tennis to let off steam. For me, it's find a quiet little jazz club and go in there and play some guitar, or find a country western bar and play some banjo. So I've got a few clips of that. We'll see what we can come up with later for your audience.
That's awesome. I just flew in. I was in Dubai. I just flew in today to Armenia, and there's excellent jazz clubs here, Chris. The one day I look forward to welcoming you here in Armenia, and I'll take you to some of the jazz clubs we have here.
Well, you're not the first invitation I've got to come to Armenia, so I really want to make that happen. Let's do that soon. I can't wait.
I love it. Well, Chris, let's jump right in. Actually, for the benefit of our audience, Chris and I were on stage together at Crypto Bahamas. There was this stage sponsored by Deltec that we were both on, and we had such a good time. And really, my message to Chris after that Trusting Disruption stage presence was, we need to come on the show. We need to go more in depth in some of these topics. So I'm very, very happy that we were able to do this today. There's a couple topics I want to really go deep today, and one of them is obviously the state of crypto regulations in the U.S. I want to talk about the U.S. digital dollar. That's something you've been very passionate about as well. And also the role of competitiveness of the U.S. financial markets and why we need a CBDC. But also I want to talk about some of the more regulatory topics that I think could be quite relevant to a lot of our listeners. In particular, some of the stuff happening right now with the CFTC, with the potential direct clearing of margin trades. I know it's a topic that you obviously have a lot of expertise in. And more generally about what's happening with regulators and regulations in the U.S. So a lot of topics I think we're going to have an excellent show today. I want to really start maybe just setting up the scene, Chris, from your perspective. Obviously, you've been a regulator, right? You've been in this space. You're a crypto dad at the end of the day. If you had to rate crypto regulation, let's say from a 1 to 10, what's the grade that you would give to the state of crypto regulations in the U.S. today? And where do you think is the biggest gap that we have right now?
When I was in school, we had, grades A through F, but there was another one if you didn't get everything done, and that was called an incomplete. I would rate U.S. regulation right an incomplete. In some areas, I'd give it an A. In other areas, I'd give it an F. In fact, the one area I'd give it an A is work that was done under my administration at the CFTC to regulate Bitcoin futures. We think about the United States as being behind, but in fact, in one instance, the creation of the world's first fully regulated market for Bitcoin futures, that was done in 2017 by the CFTC. And I wrote about this in my book, Crypto Dad, The Fight for the Future of Money. At the time we went forward, we were criticized by regulators around the world. European regulators, Asian regulators were very concerned that, in their words, we were legitimizing Bitcoin by allowing a regulated market to emerge. And my response to that is, it's not for regulators to legitimize or delegitimize a lawful product. It's for regulators to create a well-functioning, well-regulated, orderly market. And that's what we did. And as a result, an enormous explosion of institutional interest in Bitcoin came about because institutions could now invest in a market that was well-regulated. And so in that regard, the U.S. got an A plus and was ahead of the world. But in other areas, Bitcoin spot ETFs, for example, the United States lags the rest of the world. We know there are functioning Bitcoin ETF markets around the world, and the United States is still nowhere in this regard. And so, our grades are all over the map. It reminds me of actually my kids when they were in high school. Grades are all over the map, and in some ways very incomplete. However, having said that, Henry, it's typical of American regulation to be behind the curve. Let me just give you a little dichotomy. In Europe, the European approach to new innovation is often to write a rule very early in the life cycle of that innovation. And there are positives to come from that. One of the positives from a European point of view is it exports their regulation. In some ways, they create it first and then tell the world, okay, we've set the market standard. If you want to operate in Europe, you've got to adopt our regulatory approach. The United States is often the reverse. The United States is often the innovation goes way forward before regulation catches up. And we've done that with the internet and others. On balance, I actually like the US approach, and I'll tell you why. The shortcoming of the European approach is by writing the regulation before the innovation really matures, you now require innovators to innovate to the regulation. The innovators innovate to solve regulators' needs, not to solve the market's commercial needs. By regulating late, as we do in the United States, innovators now innovate to solve commercial problems, to solve societal problems, to meet the demands of their customers rather than to meet the demands of their regulators. From a person who spent 35 years in markets before going to Washington, I tend to look at the world very much from a business and commercial point of view. I actually think that's better. I think that better serves society, that innovators innovate to solve social and human and commercial issues rather than solve regulators' issues. Now, it means it's harder for regulators because they need to come along later in the process. And that's what we've traditionally done in the United States. So it makes it more choppy. But I always say it's not a race to be first. It's the race to be best. And maybe by coming in a little later, we'll see some of the flaws of other regulatory structures. Look at, Europe's rolled out a lot of regulations in financial markets, and some of them haven't worked really well. Some of them have been, kind of flawed. And so maybe coming in later is the better model. But there are strengths and weaknesses of both approaches.
I want to talk about the Bitcoin futures in a second, but actually on a personal level, right? And this is a conversation when I speak to many regulators around the world, I think often comes up. Do you think you're a better regulator because you spend time in the markets as a financial service professional before entering the regulatory world? And if you had a one suggestion to regulators around the world, do you think having this practical experience helps out? And especially when it comes to new topics, innovative topics like crypto, this is the kind of regulators that we need, is people with market experience, understand innovation, and then who are happy to come in and actually work in a regulatory seat.
That's a really great question, and it's rich with a lot of balancing. So, I had the honor to serve as a member of the executive board of IOSCO, which is the International Association of Securities Regulators. All the world's market regulators come together at IOSCO, hundreds. And then there's an executive board of several dozen, and I had the honor to serve on that. And I got to work with my counterparts around the globe, from the developed world to the lesser developed world, and it was fascinating. What some of my observations are, the European regulatory state has a professional civil service. Generally, you attend certain elite colleges and universities, and then you go into public service in Europe, and you spend a lifetime there. And they're very dedicated, well-educated, trained professionals. But yet few of them have spent any time in the commercial sector. Few of them have spent time building businesses. And I'm not faulting them. That is just the system. And it creates a certain regulatory mindset. In the United States, we have traditionally, because of our founding by amateurs, farmers, and we've traditionally had much more of a citizen government in the United States, and traditionally our government has welcomed people from the private sector, and it still does today. Now there are critics of that, including certain members of Congress that would like to put restrictions on who can serve as regulators. If you've been in business, whether that restricts you. I think that's a mistake, because I actually think one of the reasons the United States has the biggest, and I would argue best regulated financial markets, unquestionably the biggest by a factor of several, but I think the best regulated, is because we bring in people from the private sector who have real world commercial experience. Now, I respect my different approaches, but I think the United States approach has served well. That's not to say that some people coming in from the private sector bring some bad habits in some cases, have made some mistakes, and it's not always a perfect system. No system is perfect. But I think one of the reasons our regulatory structure, I think, has perhaps been enabled a more dynamic financial market to grow underneath it, is because of its seasoning with professionals that have served in the private sector.
It's interesting because it's obviously something I've been thinking a lot about as well, because like you said, I agree with you. I think having that practical experience has a lot of benefits. Yes, there may be some conflicts of interest, but to be fair, if somebody joining a regulator, you disclose some of these conflicts that you may have, or shares or whatever, that is easily to be dealt with. What do you think actually about post-regulatory life, right? I mean, this is often we've seen this around the world, many regulators would then end up leaving some of the regulatory bodies and join the industry. We even have it recently in the crypto industry with Brian Brooks, for example, who joined Binance, although it was for a short stint. Do you think the cooling off periods we have, for example, on that regard are good enough to avoid this conflict of interest, or you think it is what it is and it's part of the game of how the world operates?
So those cooling off periods have been lengthened in recent years. They've been adjusted. The Obama administration imposed a series of new restrictions. I left the CFTC at the very end of my 5-year term. I didn't leave early. I didn't stay on long afterwards. But I'm still subject to restrictions that's 2.5 years ago, coming on 3 years now. And I'm still subject to restrictions. What I would say is we'll always be tinkering with those restrictions, but it makes it incumbent on the individuals to have discipline, personal discipline, to show respect for your former role, and not engage in dramatic conflict of interest. Don't work on a matter at the regulatory agency and then resign and a week later join a firm that's directly subject to that. I mean, come on. What I would say to some of my colleagues, come on, guys. You had a public trust. And you held a position of public trust. Show respect to it by what you do in your post life in a way that's appropriate and discreet and balanced. And I think if people operate with a sense of self-discipline, both before the way they act when they're in government and when they act after government, we should be able to maintain this, I think, healthy. Some people call it a revolving door. The revolving door phrase really cracks me up, because having spent time in Washington, I realize that there are hundreds of thousands of people in Washington that go in a revolving door from government agency to government agency to government agency to government agency. That's the real revolving door in Washington. The revolving door is not to spend a lifetime in the commercial world, then go serve your country for several years to bring that experience to bear, and then when you're done, return to private life. That's not a revolving door. I think that's honorable service, but it does require people to treat it with the respect it deserves.
Yeah, very, very good points. Related to that, the crypto community over the last couple of years has sometimes had a difficult relationship with regulators, right? Often the crypto community has been critical of regulators. Often we've seen some crypto CEOs publicly criticize regulators on Twitter and other places. Do you think the relationship that crypto industry has with regulatory bodies, let's say in the US, is a healthy one? And what if you had one advice to give to the crypto community on how they can act differently, what would that advice be?
So before I get to what the advice is, let's just, I want to just underline what you just said. The crypto community has displayed a certain, indifference or even antipathy toward the regulatory state. Now, I would attribute some of that to just youth and inexperience, right? It's a particularly young industry run by, in many cases, people that started it in their 20s and are barely into their 30s now. Young people are kind of disrespectful to their elders, right? It's part of being young. And so I don't fault them for that. They also have a higher risk tolerance. When you're young, you skateboard, you surf, you do things that, by the time you get to our age, right, Henry, we don't do anymore because we're more risk adverse. And so, we older folks need to cut them a little bit of slack because some of it is, they wouldn't be building these great companies if they didn't have that sort of risk tolerance and risk aversion, right? So to some of it just comes with the territory. And I think regulators need to cut them some slack because of that. On the other hand, they are dealing in many cases with people's wealth, right? When we talk about crypto, is a new internet of value, a new architecture of how we record value. And a lot of people, including people our age, have now trusted them in some cases with wealth, with their value, right? And so there are responsibilities that come with that. In our mature modern democracies, we the people, have long come to an arrangement with our government that says we recognize government has a role to play in regulating and overseeing institutions that hold value, right? In Washington, for example, we don't have one banking regulator. We don't have two. We have three: the Federal Reserve, the Federal Deposit Insurance Corporation, and the Office of the Control of the Currency. And then we have a bank regulator in all of 50 states. And the same is true in Europe and around the world. The notion of bank regulation is well established in modern societies where the people have come to agree that there should be regulation of those who are entrusted to hold value. Similarly, when it comes to trading markets, we, the people, have once again come to an understanding that government has a role to play in overseeing healthy and markets that are robust and free of fraud manipulation. And once again, in Washington, we don't have one, we have two market regulators, the CFTC and the SEC. So the social contract that exists between the government and the governed assumes that there will be some degree of government role in overseeing the holders of value. So what advice I give to crypto players is you're not in this alone. There is an understanding in society that there's a role for the government in market regulation. And so you're best to go through their front door and work with them. Now, and some of our regulators in Washington say come through our front door. It's not necessarily a successful partnership, and I think there's responsibilities of the regulators as well. But we're talking here about the crypto companies, and in my advice, and if you look at the successful players, they understand this social contract between the government and the governed, and they look to operate in a responsible way. And many of the players that are going to survive this next crypto winter are going to emerge as major institutions in the future understand that. And what we need to do is turn to the regulatory side and make sure that the regulators show these new entrants the same degree of respect that the new entrants are attempting to give them. And we work together. It's not the role of regulators to protect the status quo. And so regulators need to understand that the future is digital and they need to work with this new system, this new architecture.
So I want to talk about the derivative instruments per se, but just be one question before that, something you mentioned, right? Yeah. So obviously you mentioned the front door, right? So for a lot of crypto companies, one approach is actually to go regulators and ask for permission and work with them very openly. And obviously myself, as a lawyer, somebody has been in the legal field for many years, that's often the natural approach I would take. One debate that I often have is if we look at the crypto markets today, yes, there are players that have started from day one, they went to regulators and really asked for permission. But on the other hand, you have many of frankly, the largest players in crypto today. I mean, let's face them. Like, think about the Binances, think about the FTX, think about the Deribits, I think OKX, all the big crypto exchanges you see today have started kind of in the unregulated world. And then instead of asking for permission, they ask for forgiveness. And I mean, FTX, you just mentioned, not to throw names. And again, I'm just like giving an example where when they started, they were completely unregulated. Of course, they were based in Hong Kong. And obviously now they're based in, they moved their headquarters to the Bahamas. They're regulated. And obviously they're sponsoring a lot of events. And now they obviously came in the proper way. When we look back, and obviously there's been the same thing recently. I mean, I know with the market crash now with Coinbase, of course, with a yield product that was not approved, but obviously at the same time, many Americans can go and get yield lending programs easily accessible, even in the US or with a basic VPN. I mean, do you believe still that the best approach for a crypto company today is to go on the front door and ask for permission? Or you think a kind of approach where they ask for forgiveness, but let's say in a conservative way with a common sense, could be an option that could be followed? I know it's a bit of a tricky question, but very keen to get your views on that.
So I would say that in my post CFTC life, I've advised companies both to ask permission before embarking upon an initiative, but in other cases, I've suggested they seek forgiveness later. It really is highly fact-based, circumstance-based. Sometimes there's an appropriate approach, I think, for both. Having said that, however, I think things are going to get better. And it's for a whole bunch of reasons. One reason is I'm very encouraged that Congress is now stepping in and recognizing the need for regulation and setting up a discoverable, clear framework for firms to engage. I'm encouraged because the model we set up the CFTC, when I arrived as commissioner in 2014, but I became chairman in 17. And the first thing I did as chairman was said, we need a new front door. We need a new separate front door for innovators. And so we created Lab CFTC as a destination for innovators to come and talk to us. And Lab CFTC set itself up not in Washington, but in New York, where innovation was happening. And it took the show on the road, and it went to San Francisco, and it went to Silicon Valley, and it went to Chicago, and it went to Austin, Texas, and it went to Singapore, and it went to London to meet with innovators. We felt we would take our front door where they were. And that's become something of, I think, of a model. And notwithstanding perhaps a step backwards at the SEC in terms of engaging with innovation, I think that's a step backward that will be followed by two steps forward. I think that what we're seeing right now is transitory, to use a phrase that was kicked around a year ago in Washington. I think the march is forward. And the reason why I say that most importantly is because the generational interest. We're in a strange period in history where we've got this septuagenarian leadership. And I'm not just referring to the current Biden administration. The same was true in the Trump administration. And the same is true at the global stage. We've got leaders who didn't grow up in a networked world. They grew up in an analog world. They grew up in a world of writing checks and branch banking. They didn't grow up in a world that expected 24/7, 365 transactional capability. But the generation coming up behind them, which will fill those roles and increasingly will fill the deputy and the assistant deputy roles at the agency, which are the muscle of the agency where things get done, understand this new world. Time and progress is on the side of a digital architecture of money. And so, notwithstanding maybe a step backwards here, a step backwards there, understanding of this new architecture, this new innovation of the importance of networks is progressing and will continue to progress. And the current impasse we have now will pass.
This podcast is brought to you by Bullish. Bullish is a powerful new exchange for digital assets that offers deep liquidity, automated market making, and state-of-the-art security. Follow Bullish on Twitter or visit bullish.com to learn more. Please note that digital assets and cryptocurrencies are high-risk products. Consult your professional advisor before dealing in them. Bullish's services are available in select locations only and not to U.S. persons. Visit bullish.com for important information and risk warnings. While I was doing the research for this podcast episode, Chris, I remember you wrote or you said somewhere, it's like a conveyor belt, right? And the conveyor belt is moving. And, at one point, whether you want young people are coming on board. Just on that point as well, obviously, recently, but last month, we had a new crypto bill, by Senators Gillibrand and Loomis. And obviously, it was great, right? Because obviously, it's bipartisan. It's very unlikely it's going to go into law, of course, but at least there's a kind of a road forward, like you alluded to. Do you believe that we're going to be able to reach proper U.S. crypto regulation? Like as you said initially, it's a work in progress. But do you think that we're on the right track with some of the recent initiatives we've had that are pushed, I guess, and also there's been a lot of lobbying from the crypto community as well in bringing this forward?
Yeah. So for your listeners who, and there's no reason they would spend a lot of time watching how legislation moves through Congress, what legislation needs to move through, it's like a train that leaves its part of its starting point and then moves along, and it goes from village to village and town to town to its ultimate destination. And people get on and people get off, but eventually it arrives. What's important about the Lummis-Gillibrand bill, which you just mentioned, a train has now left the station. And that train is comprehensive. It's got many cars on it, deliberately so. Some of those cars will be taken off along the way. Some will be added. Some passengers will get on. Some passengers will get off. But the important thing is now the train has left the station. It's bipartisan. It's comprehensive. And it's very, very thoughtful. I'm very optimistic. It won't happen in this Congress. This Congress is effectively done now because after the 4th of July recess, every congressman and woman, all 560 of them or so, are running for re-election in November. So they're busy campaigning. And as far as the Senate, 1/3 of them are up for re-election in November. And so it's unlikely that this bill will get done in this Congress, but I think it's very likely that it will get done in the next Congress, which will start in January. And in the first year of every 2-year Congress has a 2-year term. In the first year, a lot gets done because the second year, once again, becomes an election cycle. So I think there's a very good chance that we'll see legislation in 2023, a very good chance. And I had the privilege of working with Senators Lummis and Gillibrand on different parts of that bill and giving some thoughts and sharing with them some views. I'm very supportive of it. I've spoken to, on their behalf, on its behalf, I've spoken to a number of members of the Senate and Congress. I think it's a very good starting point. There'll be a lot of negotiation, but I'd be surprised if by the end of 2023, early 2024, we don't have comprehensive crypto regulation in the United States. And I think I think we'll all benefit from that. And that will now provide instructions to the SEC and the CFTC. They won't be able to avoid duties assigned to them under that legislation. And I expect that some of those duties will be to take a much more open-minded and positive view on crypto development.
Yeah. I think that will be very interesting, Chris, especially that, there's now other jurisdictions that are popping up right around the world. Obviously, they don't have as big of a deep or sophisticated financial markets as the US. Like I mentioned, the US is multiple times bigger, right? Like we're seeing in North America's Bahamas, actually, where you and I were a couple of weeks ago, places like Dubai now in the Middle East really focusing on crypto, and obviously the other places in Asia and other places in Europe as well. So I think you're right. If the US is able to attain this kind of comprehensive crypto regulations, it could be obviously very positive.
And Henri, let me add one thing. The reason why I'm relatively confident it's going to happen is because it's not just the crypto companies that want it. The big asset managers want it. The big financial institutions want it. The Americans' big banks want it. Everybody wants to see. Everybody's frustrated by the lack of clarity and the regulation by enforcement that's coming out of the SEC. They want to see a comprehensive framework. So there is really a groundswell of support by the financial services industry writ large in the United States. And that's a very powerful force, politically here in the United States. So that's the reason why I'm strongly optimistic it's going to happen, is because it's not just crypto that wants to see it happen. It's broadly supported across the financial service landscape.
Absolutely. And I think you're right. You mentioned before, I remember when the CFTC approved the first cash settled Bitcoin futures. I mean, that was kind of shocking at the time, right? I'm not surprised you guys got a lot of pushback back in the day. But I think now there's a lot of these traditional financial institutions and players who want to get in, asset managers. I mean, sometimes for it's a good way to make money. It's greenfield. There's a lot of opportunities for them. And the industry is becoming more institutionalized as well, right? So there's definitely a lot of upside there. I want to ask you one question about, crypto regulations, because obviously, you were kind of behind the driving force, the train at a time behind having these Bitcoin futures approved. And now, obviously, in the market in the US, Bitcoin futures are cash settled, ETFs are available. There's been obviously, by the time we were recording this in early July, there was obviously another rejection of the Grayscale ETF, for example, a couple of days ago. And there's been an appeal from Grayscale on this product. What's your perspective on why there is so much reticence on behalf of some regulatory bodies, namely the SEC, in having a Bitcoin ETF, a physically settled Bitcoin ETF?
Well, in part, I think there's some colorable logic to their concern, and it's as follows. The CFTC oversees the Bitcoin futures market, but doesn't oversee the potential for the operation of Bitcoin futures, right? Now, that may seem to your audience odd, but if you think about it, there's got historical precedent. The CFTC oversees markets for wheat futures, but doesn't oversee the underlying spot trading of wheat. If it did, it'd have to basically regulate every grain elevator in America, every grain warehouse in America. The CFTC oversees the markets for gold futures, but doesn't oversee spot gold trading. Because if it did, it'd have to oversee every jewelry shop in America and so on and so forth. So the CFTC traditionally oversees the markets for futures trading, but not the underlying spot. When the CFTC in 2015, during my service on the commission, declared Bitcoin to be a commodity, once a futures market developed, the CFTC would oversee the futures market, but doesn't oversee the trading of the underlying commodity. So spot Bitcoin markets are not regulated by the CFTC, but Bitcoin futures markets are overseen. So that's the predicate to say, well, the SEC is willing to say they will approve an ETF on that CFTC regulated Bitcoin futures market, but they won't greenlight an ETF on a spot Bitcoin market because there is no CFTC there to regulate that spot market. Now, obviously, that's a compliment to the CFTC's quality of regulation that we started during my chairmanship in 2017. To put it in its best light, that's the understandable reason. But it still is somewhat curious when, in fact, many other jurisdictions have gotten comfortable with ETFs on spot markets in a way the SEC hasn't. And, the SEC oversees ETFs on palladium and other metals where there is no oversight of the underlying commodity market. So perhaps there's been a lack of will to actually say, okay, this is challenging. We don't have the CFTC there. Maybe if the CFTC were given authority, as is proposed in the Lummis-Gillibrand bill, to oversee the underlying spot market, then maybe the SEC get comfortable. But even if that's a year away or 2 years away, perhaps under different leadership in the SEC, there might be a willingness to work with the parties that run the spot market to require them voluntarily to put in certain protections and controls. Maybe if there was a self-regulator for the spot market, then the SEC. So I think maybe what's missing is a deep willingness to engage. So, for example, when we at the CFTC were approached by CME and CBOE about creating that Bitcoin futures market I talked about, we actually came to them and said, but we like it, we're going to work with you, but we want a few things extra. You don't have to do it, but if you did it, we could get more comfortable. And we came up with a process of what we called heightened scrutiny. We actually required them to do certain surveillance and other things that I've written about. You can find that publicly out there that we required them to do. Maybe the SEC could approach this and say to the ETF operators, we're not comfortable with as is, but if you'll do the following, maybe you do some self-regulation, maybe you do this. I think there's more than one way to skin the cat, and maybe what's been missing is a willingness to think outside the box, and maybe it'll be a little bit more interactive with the participants to find a way forward. And so, sometimes if there's a will, there's a way, and if regulators are willing to think creatively, and I'm hopeful that perhaps, in the future, the SEC may see their way to thinking a little bit more creatively in this regard.
Talking about the SEC, when Gary Gensler got his role, actually in my newsletter, I was talking about him and my personal view at a time where this was very positive for the crypto industry because for once we, actually probably along with you guys are probably two of the head of the regulatory bodies we've had over the last couple of years that really understand crypto, understand the mechanics of it. And I have to say, I've been too naive at a time, and I talked about this in my newsletter in the past as well, I've been kind of surprised, Chris, personally, that there has not been more activity when it comes to, let's say, new innovation or openness to crypto. I mean, you worked with Gary Gensler, I believe, if I'm not mistaken, in the past. Like, are you surprised that some of the pace of innovation at the SEC, or you think it's just the beast, it's just the oil tanker of the SEC is that big, and it just takes time to change things?
Been both a commissioner, a chairman, and now a retired chairman. I've learned along the way not to criticize chairman because you never know when you might be in that seat. And I benefited from my predecessors, including Gary Gensler and Tim Massid, when they left the commission, not criticizing the work I did at the commission. And I make it a practice not to criticize others. And who knows what happens in the future. What I would say is, I learned a lot of things. I had the honor to serve. I learned a lot of things, and my approach perhaps is one that's driven by a recognition that it's not the regulator's job to protect the status quo. That's nowhere written in the authorizing statutes of any regulator, right? Innovation will come. It will change the industry. Markets are very much organic things. They're always evolving. They're always changing. It's the job of regulators to see the direction of travel and to skate, in the words of Wayne Gretzky, skate to where the puck is going, to see how the organism is evolving and to adapt your regulation as it evolves. And I think that what's really needed here by the two market regulators, and I think the CFTC is doing a good job of this, is to continue to see how this new technology, this new architecture, this internet-based approach to value. Whenever I have these conversations, I always say, let's stop and talk. What is crypto, right? What is crypto? Up till now, all value, your retirement money, my savings money, my bank account, are recorded as liabilities on roughly 7,000 banks around the world. All, aside from the few cash dollars and dollar euros, most money, 90% of money, is basically a bank liability somewhere. What crypto is saying, okay, fine, we got a bank liability-based system, but what if we did something different? What if we came up with some protocols that allowed us to use the internet to store value in the same way that we used to make phone calls on proprietary lines owned by phone companies, and now we use FaceTime to call anybody in the world 24/7, 365, using the World Wide Web, using that web of computers based upon certain protocols. What if we come up with software protocols that allow us to use the web as the store of value, as the confirmer of value, as the transfer of value, rather than relying on these proprietary bank balance sheets? That's a whole new architecture of money and value in banking. It's revolutionary. And it's not the job of the SEC, the CFTC, the FCA, the Bank of England, the ESMA to thwart innovation. It's the MAS. It's the responsibility of regulators to see how innovation is changing markets and to adapt with that innovation. And that's the big challenge. And that's the one thing, when I'm in private meetings with current regulators, fellow regulators, former regulators, I say to them, guys, things are changing right before our eyes. Don't be the guys that are trying to hold it back. Don't be the guys that say, why do we need to land a man on the moon, 50 years ago? Don't be the people that say, why do we need an internet? Why do we need computers to talk to each other? Because it's going to happen. Be the ones that say, okay, it's going to happen. How do we anticipate it? How do we bring the core values that made our financial system strong? Values of transparency, values of fairness, values of prohibition against fraud and manipulation. How do we bring that to bear in a new internet-based system of money and value in the way that we're able to do it in the old bank liability balance sheet-based system of value?
And I think you do a great job in your latest book, Crypto Dad, which I highly recommend to our audience to read. It's published by Wiley. Actually, I have it next to my in my living room here. I think it's a great book, by the way, because we talk about your history, how you ended up in your role at CFTC, your background, but also we talk about this, the internet of value and how it basically did what the internet of information, what it did to immaterial things. I think you did a great job in the book. I highly recommend it for our audience. Actually, I think it's Crypto Dad: The Fight for the Future of Money, if I'm not mistaken, Chris, under the titles.
Yeah, and I recommend people read it right after they finish your book, Henry.
Yeah.
Make it the next
Which, by the way,
one.
for those who are watching this on YouTube, Chris has my book literally behind him, which is quite
The Future
quite
of
funny.
Finance.
Appreciate it. Yeah, but I think books are very important from that perspective. And I think somebody wrote a couple of books like yourself. It takes so much time to put it down, and you spend so much thought and time to put your thoughts on paper because it's there forever, right? And you don't want to screw it up. So well done on that perspective, Chris. Just want to ask you on one thing as well about I think we need to talk about this, right? Because obviously there's the pending FTX application with the CFTC for the direct clearing of margin trades. And just want to get your view on that. Maybe for the benefit of our audience, explaining what's the importance of that and what could be the meaning, what could be the impact of that and its potential impact. So really, obviously the application is on the way, but really what does it mean if a crypto exchange is able to actually directly clear its margin trades?
So a couple of things. So as you mentioned, the FTX has approached the CFTC with a new approach to how clearing and margin is set on leveraged products traded on CFTC regulated exchanges. The background to that is that the US has the world's largest derivative markets, and they're marked by kind of a unique approach, and that is that in the United States, for the most part, there are no direct clearing memberships with the exchanges by individuals. It's mostly institutional, and for smaller players, they go through an intermediary called a futures commission merchant or an FCM. That's not necessarily a model that's adopted elsewhere. In many other jurisdictions, individuals can have direct relationships with the exchange and the clearinghouse. Sometimes they're separate, sometimes they're integrated. In the United States, they're generally integrated. So the CFTC has been asked to look at this new approach by FTX. I don't want to comment on the process because it's an open process right now. I'll say two things. One is, I think what FTX is doing is part of that, what I just spoke about, that evolution of the market. FTX's technology gives it the ability to do much more granular transaction by transaction margining, and this is part of this changing evolution of technology that regulators I advocate be much more open to. And to the CFTC's credit, they have not just universally said, well, this is a change to the status quo. We're shutting it down simply because it's a challenge to the status quo. In fact, what they're saying is, let's talk about it. Let's have an open dialogue about it. Let's invite the public to weigh in. And I must commend CFTC Chairman Benham, my successor, and his team, and all of the commissioners for the thoughtful way they're going about this and giving this an open airing. That's an example of a regulator showing that as things evolve, they recognize their duty is to evolve with it and to see where it's going and to see how it fits within their core mission and their core values. So I have nothing but good things to say about the CFTC, and I commend FTX for putting forward a new model. Now, how it's going to play out, there have been legitimate concerns raised by the traditional players. I think the CFTC is well placed to sift through those concerns, maybe make some conditions on the FTX application. It's a possibility they might give it conditional approval to see how it works in real time over a period of time before giving it final approval. So I think there's a lot of things that can come out of this. But I think, in short, the process is working exactly as it should. And my compliments to the CFTC for that open-mindedness. And I think it's a model that should be adopted by other market and other regulators in terms of evolving with the emergence of a new financial architecture.
Yeah, I think it's going to be very interesting. Like you said, the technology now enables us to do things that we couldn't do before, frankly, right? I think that's going to be very, very interesting. One last point I want to discuss with you, Chris, today is obviously you've been a very big advocate of the US digital dollar. Actually, in my last book, The Book of Crypto, I talk about it actually quite in depth. And I think there's a lot of things that are quite interesting. And I think one area I just want to get your views. Recently, there was obviously there was a collaboration between the Digital Dollar Project, which you're the executive chairman of, and DTCC to explore the use of a US CBDC in securities and clearing and settlement. And obviously, what I found fascinating, the US Digital Dollar Initiative, and correct me if I'm wrong, Chris, but I think this is the first CBDC initiative that is not initiated by a central bank. It's run by the private sector, right? And so what do you think is the impact for this? And maybe for our listeners, obviously, I think we're all familiar with what's happening with CBDCs, but what do you think the impact could be in such a context? And what's the role impact that it can have?
I want to make a slightly nuanced comment. The Digital Dollar Project does not advocate the deployment of a U.S. central bank digital currency, a digital dollar. But what it does advocate is the United States to advance its exploration to examine both the challenges and opportunities. And it's a nuance. But if you really believe that a decision about deployment is such a big one that it's going to require huge amount of data and empirical study, then it makes a lot of sense that we want to advance our exploration. So when and if the United States does decide to deploy a digital dollar, there's a body of work. And that's what we're doing at the Digital Dollar Project. As you said, we announced in April the world's first experiment with a US CBDC. But more importantly, we announced the first experiment with any CBDC anywhere in the world that's entirely private sector led and not led by a central bank. And why is that important? Because our foundational principle at the Digital Dollar Project is that money is as much a social construct as it's a government construct. In fact, without societal trust, money is worthless. And so it's necessary to engage the private sector in the design and elements of a central bank digital currency well in advance of actually deploying it. And that's what we seek to do. A year ago, we announced 9 pilot projects, everything from retail use to wholesale use and everything in between. And the one we announced in April was the first of the 9. We have other announcements coming out, some on the retail side, some on the use in small businesses, some in the use of global remittances. We're partnering with major institutions from some of the major Wall Street banks, the payment providers, MasterCard, Visa, PayPal, large remittance providers, as well as some NGOs. And so we've got a big agenda. But the important thing is, and I say this with great respect to my former colleagues at the central banks, at the Federal Reserve, the Bank of England, but money is too important to be left to the central bankers. We, the people, have as much to say as to what digital money of the future, whether it's sovereign, provided by a government, or non-sovereign, provided by a stablecoin operator. The values, how it's going to be handled, how our privacy is going to be protected, whether our transactions are going to be surveilled as they will be with the Chinese digital ECNY. And so there's so much work that needs to be done, I think, over the next decade or so to examine how CBDC would work in real life scenarios in societal constructs. And that's why we started the Digital Dollar Project.
I'm such a big fan, and I think the approach I think we should, as soon as some of these initiatives are launched, we should have you back on the show to talk about some of this. And I think some of the debates you mentioned on for the need of privacy, for example, in a CBDC, and the role it plays, and like I said, money is quite important. I think this is going to be my bet. This is going to be even a political issue, right? We may have elections now. We may go actually have a political debates on abortion and other Second Amendment, other stuff. But I think what about we have it on the privacy of money, I think, which can be quite interesting, especially in places where the US, where the public will have a voice, which is probably not the case in other countries that are implementing the CBDC. I want to quote you, and I have this on page 64 of my book, but, in 2017, you mentioned this, I think it was in front of the Senate Banking Committee, and it was I just want to read it for our audience. You said this is actually the opening remarks that Chris gave to the Senate Banking Committee, and I quote, "It strikes me that we owe it to this new generation to respect their enthusiasm about virtual currencies with a thoughtful and balanced response, not a dismissive one, to crack down hard on those who try to abuse their enthusiasm with fraud and manipulation, to thoroughly educate ourselves and the public about this new innovation, to make good policy choices and put in place sound regulatory frameworks to reduce risk for consumers." I have to say, in my data referred to this as that we owe it to this new generation, a comment that you made, I think, which will go down in the annals of crypto history. And it's in my book as well. But do you still believe in what you said? I mean, do you think these comments that you made in 2017 still hold true today? And they apply, I guess, in this broader elements of things you're looking right now, from digital dollar to some of the policy initiatives you're involved in?
Absolutely. Anytime I questioned, as perhaps all of us have done over the last few weeks, the value proposition of crypto, just talk to a young person. They have no patience for check writing and branch banking and bank closures and the ability to move money, or the inability to move money around the globe that they face today. They grew up in a network 24/7, 365 world where value, whether it's a game token or a photograph, can be moved around the world in nanoseconds, and they expect the same thing for their money. And the only way that's going to do that is to move away from a liability-based system to an internet-based system. That's going to give them that networked 365 capability. And so in my mind, there's no question of the direction of travel. It's just as all things, right? It's in a human world. There's detours and there's dead ends and there's step backs, but long term, or even medium term, this is the direction of travel. And I think we all owe it to this generation to respond to that with a thoughtful and practical approach.
Here you go, wise words. Talking about direction of travel, Chris, we're completely over time. I'm getting messages from Alex, our producer, saying you gotta end this, but we're gonna end with our traditional bell that is with me as well. I had it last time on stage in the Bahamas, and it's here with me on the show today. So, Chris, I'm gonna ask you quick questions. I need 1 or 2 word answers, and we're gonna jump right in with the bell, keeping us honest. Are you ready?
Go.
Let's do it. Your nephew comes to you and asks you for a piece of advice on what is the one course he should take at university. What is the one course you recommend your nephew or any young person to take in university today?
Accounting.
Accounting. There you go. Interesting. Oh, we can have a whole session about that as well. You're a lawyer by background. If you had to start your life again, would you go to law school again?
Yes.
Why is that? Quickly, in a couple seconds.
Law is a great framework for making sense of the world. We live in sophisticated societies bound by laws. I think it's a great mental construct.
Agree. This is a tricky one. Hope you're ready. It says, if you could go back and be the head of a regulatory body outside of the US, which country would you be interested in being a head of regulator outside of the US?
UK.
Interesting. Oh, I think we could have a whole episode on that as well. What do you do on your weekends when you're not thinking about regulations or law?
Play guitar and banjo.
Here we go. Our audience has probably had a chance to listen to it in the episode with that Easter egg as well. Favorite musician of all times?
Oh, gosh. A strange one. Al Stewart.
Ooh, interesting.
Because he writes about history.
Here we go.
He's a historian, a musician historian.
Wow. What is your favorite Netflix or YouTube series?
Oh, gosh. The Marvelous Miss Maisel.
There we go. What is your favorite restaurant anywhere in the world? Could be in New York, in the US, wherever. What's your one favorite restaurant you recommend to anybody to try once?
The 76 House in Tapan, New York.
Woof, here we go. Free advertisement there from that perspective. Coming back to your regulatory days, what is the one thing that surprised you the most when you joined the CFTC?
Oh, my goodness. The amount of waste.
Yeah, I think that applies to a lot of regulatory bodies and government bodies, actually. If you could launch a new crypto startup and you could choose one crypto CEO, who would you have as a co-founder?
Brian Brooks.
Oh, here we go. Interesting. Wow. That's an interesting answer. I'm sure Brian is listening to this. So he'll be happy to hear this, that he'll answer your call on that. And last question, Chris, Giancarlo, again, thanks for being with us. If you could have lunch or dinner with one person dead or alive, if you could have lunch or dinner with one person dead or alive, who would you have it with?
Teddy Roosevelt.
Ooh, why is that?
Oh, he lived at such a fascinating time, and he actually brought America into the modern age. We were an agricultural plantation society, and he moved us into the modern world in so many ways.
Amazing. Chris, where can people find you? On Twitter? I mean, because Crypto Dad.
Yeah, I tweet at Giancarlo MKTS, Giancarlo Markets on Twitter. On LinkedIn, I'm senior counsel at Wilkie Farr and Gallagher, a wonderful law firm in New York, and you can reach me there at jcgiancarlo@wilkie.com. So please do reach out to me if I can be of assistance or advice or just want to talk. Reach out to me.
Chris, it was a pleasure having you with us today. Again, thank you for all the loyal listeners. Again, guys, thank you for all the support. Again, if you like the show, make sure to also you follow me on LinkedIn and Twitter, especially for the Crypto Capsule Show, where I summarize the global crypto developments you need to know in less than 60 seconds. And also for if you have anybody interested in learning more about crypto, you want some of your friends to learn about crypto in the summer, of course, is my latest book, The Book of Crypto. But also, let's not forget that I have a couple of online courses as well that could be interesting. One of my latest course, the Introduction to Crypto, Bitcoin and Crypto Assets on Udemy, is a highest rated crypto course as well. And also I have a lot of educational content as well on YouTube that is now available not only in English, but also in French, Spanish, Chinese, and other languages as well. So hopefully it can be very useful. Thank you very much, everybody, for listening. Thanks for being with us today on the Future of Money podcast. Thank you very much, Chris, for being with us. We're going to have you back to talk about some other CBDC initiatives. And thank you, everybody at home, for joining us. Thank you for your loyalty, and see you all next time.